Everyone, how's it going? This is Patrick, and today we're going to talk about the SEC timeline, we're going to talk about the tie-out binder, and we're going to talk about how to roll forward the document. This course is really designed for someone that either works at a publicly traded company or someone that wants to work at a publicly traded company in the accounting or finance department. And this course is also designed for SEC attorneys or aspiring SEC attorneys so they can see what goes on at their client locations. This course is not designed for someone that's looking for a long list of SEC guidance or SEC rules or GAAP rules. Those things are really important to the process. It's just not what this course is about. I want you to be able to take away something from this course and actually apply it to what you do every day. So with that said, let's get started. Let's first talk about the various roles that are performed by the people involved in the SEC reporting. First, you've got the Director of SEC Reporting or the Senior Manager of SEC Reporting. This person is typically the point person at the organization. While titles vary by organization, this person is the key person that coordinates all of the SEC reporting tasks. Sometimes this position is held by a more junior person, and in such cases, the burden of coordination is going to fall on some of the more senior people. Now, if you're currently in this role, I really urge you to take it on yourself, be responsible for as much of the SEC reporting process as you can. The more you're responsible for, the longer your resume gets, and the more fulfilling your job gets, honestly. And so with SEC reporting, the first thing that I like to start with is the timeline. Now, out in the course documents, you'll see that there is a sample timeline. You should download this and use it. So we're going to talk about that specific file. Right here, what I like to do is I like to set up a full year's worth of timelines. So we've got the K here, we've got Q1, Q2, Q3. And when we talk about them, let's talk about the 10K. So the audit committee meeting, it all starts with that. And the audit committee must approve the financial statements before they're filed with the SEC. It's typically done at the audit committee meeting that's held a week or two before the company plans on filing its 10Q or 10K. Now, if the CFO has not already done so, or if the chairman of the audit committee has not already done so, the individual in charge of SEC reporting within the company should use the higher-ups to get these dates set as far in advance as possible. Now, this is going to greatly facilitate the SEC reporting manager's ability to prepare this timeline and coordinate the entire SEC reporting cycle for the period. It's very nice to have these meetings set far in advance. And then once I have the audit committee meeting date, I'll work backwards from that date and then forwards from the earliest possible general ledger close date in the timeline. Now, as a general note, it's a very good idea to ask people about what dates are reasonable versus telling them. This is going to ensure buy-in. And now, ultimately, as with many other processes I'm sure that you work on, the individual in charge of the SEC reporting cycle has several parties that do not directly report into him or her. In these types of situations, it's going to work out in your advantage to be respectful in getting agreement on dates from everyone else. With that said, you need to be firm. If the dates that people are giving you aren't going to work and they're going to jeopardize the timing of your filing, you need to speak up. Now, another thing that I like to do is that as various dates and the milestones in the timeline approach, I send out reminder emails, something like, just wanted to make sure that you are on track to provide XYZ document by tomorrow. Now, it's important to send out these reminders not at 4 p.m. on the day that they're due. I send them out a day or two in advance. And you have to really feel out the different people at your organization to determine who needs more hand-holding and nudging and who needs less of it. It's going to be different at all organizations. And it's just really important that you understand that you're the one that's responsible when the document is late. And so it's very important to get everyone's buy-in. And finally, after the reporting cycle, I like to look back at my timeline and see which dates on the timeline we hit and which dates we didn't hit. I then use that to build out next quarter's timeline and to edit next quarter's timeline, or to really be prepared next quarter when these certain dates start approaching, that I know I need to reach out to people in advance and give them a fair warning. Now, specifically in preparing the timeline, like I said, we start with the audit committee meeting dates. So these are all the internal parties that are involved in the process. The agreeing on filing date with the investor relations is next. Investor relations typically does not like to file on a Monday or a Friday, so it's really good to talk with them and get that filing date finalized. And then I'll talk with the general ledger team and figure out when they can feasibly and reasonably actually have the general ledger closed. It's important to not get too aggressive of a date of general ledger close, because what's going to happen is if you get too aggressive of a date here and you have wishful thinking, it's just not going to happen, and you're going to have post-close adjustments, which cause a lot more work in the long run. So it's important to get real dates for this. Next, I send it up the chain and get the dates agreed to by the VP controller and the CFO if necessary. It depends how hands-on the CFO is. And then I get internal audit to agree on the dates. And now we've got the external parties. So the outside counsel and inside counsel, I send this timeline, or at least send the key dates, like when I'm going to provide a draft to each one of them, and when they need to have their comments back to me on the draft, and then the filing date. I'll also send a draft of the timeline to outside auditors. They're a critical component of this timeline. We need to get their fieldwork scheduled. We need to figure out when we'll provide them a draft of the 10Q or 10K, when we'll expect all of their comments to be returned to us by. And then we also need to figure out the filing date and ensure that the filing date is going to work with them as well. Another thing is send all of the key dates to the XBRL team, whether it's internal XBRL or if you are outsourcing all of your XBRL, you need to have the dates to them so that they know when they need to deliver the XBRL. And then also, if you're coordinating with a tax team, if you have a quarterly provision or a year-end provision, then you need to get that into the timeline too, and make sure you talk with them and let them know when the general ledger or trial balance is going to be ready for their review, when all of their PBC items will be ready, and when you expect them to return a draft of that provision workbook. After you've got everyone in agreement, both internal and external, now it's time to call it final, finalize the timeline, send a copy of it out to everyone saying, here's the final timeline, and then you start just working towards it. So just to recap some tips and tricks, for most parties involved, be reasonable with the dates, don't be over aggressive. With that said, don't agree to any dates that are going to jeopardize your filing date. Send emails to parties a day or two in advance ahead of key milestones. Figure out which individuals need more and less hand-holding. And then make your own notes of the timeline of when dates actually happened, and figure out if you need to adjust future quarter timelines. Now, for this course to qualify for continuing education, we have to go over a couple review questions. So let's get started here. Which internal group does the SEC reporting manager not need to coordinate the reporting timeline with? Is it A, investor relations, B, external counsel, C, independent auditors, or D, the payroll department? So does everyone have their answer? All right, let's look. So the answer is D, payroll department. That's the only department out of that list that we don't need to coordinate with. Investor relations, we definitely need to coordinate with because they need to agree on the filing date with us. External counsel, very critical that we coordinate with them also. They need to agree on the filing date. They need to agree on when we'll get the draft to them and when they'll return with their comments of the draft of the 10K or 10Q. And then independent auditors, very critical that we coordinate with them. We need to coordinate the field work time. We need to coordinate when they will review the 10Q or 10K and return comments. We need to coordinate when they'll be providing the audit committee report for review. And so they're a very important party. Payroll department, while the general ledger team is going to need to coordinate with them for the month-end close, SEC reporting specifically doesn't really need to coordinate with payroll. Number 2, fill in the blank. So when preparing the timeline, the SEC reporting manager should start with the blank and work backwards. So the date the auditors will start field work, they should start with the date the 10Q or 10K draft needs to be provided to the auditors, the date of the audit committee meeting, or the date that the general ledger is closed. So everyone have their answer in mind? Let's look. All right, the answer is the audit committee meeting date. Remember, that's where we start from, and then we work backwards. The date that the auditors will start field work, that's too far into the early part of the SEC reporting cycle. The date that the draft needs to be provided to the auditors, that's not where we start. That's more in the middle of the process. And then the date that the general ledger is closed, that's right in the beginning of the process. We don't work backwards from that. It's that audit committee meeting date. All right, so now let's talk about the tie-out binder. All accounting departments are going to do things a little differently, but most companies are going to have either a hard copy or a soft copy of the tie-out binder. Now I'm going to talk about how to do a hard copy of the tie-out binder. First, we'll print off cover page and spine. Now it's good to have a template for these that you just update the dates every single quarter. If you check out the course documents, you'll see that I've got a binder, spine, and cover page template. And then we set up an index. This can either be done where you print it out or I just handwrite it, and the index just is essentially the table of contents of the tie-out binder. And then, while not specifically required by laws and regulations, companies that are filing with the SEC really should be maintaining a tie-out binder. Now, the main purpose of the tie-out binder is to provide support for every single number that appears in the 10Q or 10K. After we enter a number or date into our working draft of the 10Q or 10K, we then print off whatever spreadsheet, Word file, PDF, whatever it is, we print it off, we number the page. I like to use some type of logical numbering system. For example, my BS pages are balance sheet, and then IS will be IS-1, IS-2, and then for footnote 1, it'll be 1-1, 1-2, and so on and so forth. So let me show you a little bit exactly what it's going to look like, what I do. So this is what it looks like in Workiva, and let's say we want to update this number right here. What I do first is I'll print off a tie-out copy of our entire document, which will look something like this, and I put the date on top and write the word tie-out copy, and this is just a training example. And then let's say this is the number that we're going to be updating. It's going to be 700,000, so we'll print this off after it's updated, but it's going to look something like this. So we put this red line in here, write IS-1, that's the page number that number is going to come from. And then our support will look something like this, where it's something printed out, and here we've got the page number, because it's all going to get a 3-hole punch when we put it into the binder. And then there's our support for that specific number. Now, this is Workiva. I like Workiva a lot, and I'll talk about some of the external parties like Workiva or RDG or Donnelly later on in a different course. But this one's just an example of what it looks like in Workiva. Workiva has this main, what I would call a Word file here. It's their own proprietary version of a Word file. And then this is sort of an embedded Excel spreadsheet. You can't edit it right here, so if you double click it, it's going to say you can't edit it, but that's fine. Just hit View Source, and it'll bring you up to the underlying spreadsheet where you do edit it. And so let's just put in our number, and we'll see that now it's updated. So it's pretty straightforward. A lot of the other systems are going to work in a similar manner to that. Now, near the end of the reporting cycle, this tie-out copy right here, I'm going to be continually updating this. As I update the numbers, I'm going to re-reference, reprint this document. As we get to the end of the reporting cycle, I'm going to print off a final copy of the 10Q or 10K. I'm going to transfer all of the different tick marks and references that we have, all of the red lines that I've written on here for where the numbers come from. I'll transfer them to a final document, and that's going to become a component of my tie-out binder. I'll 3-hole punch it and put it in there. That way in 2 years, 5 years, when someone's going to come back and question a number, maybe say, where did that 700,000 come from? They'll see this, and then they'll also see this tie-out, and they'll say, oh, I see where that came from. Now, while the tie-out binder is not required by the SEC, most good Sarbanes-Oxley control systems, even if you're 404A or 404B compliant, either way, you're typically going to have a tie-out binder. Whether it's electronic or hard copy, either way works, but most internal control systems are going to have one or the other. So next, let's do a review question. So number 3 here, so the fill in the blank, SEC Reporting Manager prepares the tie-out binder because A, it's explicitly required by the SEC, B, the CEO must review it, C, the auditors require a hard copy of the tie-out binder, or D, the company's internal controls will generally require that the company prepare a tie-out binder. So everyone have a second to think about it, and let's look. All right, answer is D. So it's not explicitly required by the SEC. The CEO typically does not review this tie-out binder. Auditors more and more are using soft copies of tie-out documents and of audit support, and they don't need hard copy tie-out binder. You typically will not get pushback if you were to switch to a soft copy binder, as long as you retain all of your approvals subject to your internal control policies. The answer is, of course, the company's internal controls generally will require the company to have a tie-out binder. Even if it's not required, it's good practice to have a tie-out binder. All right, let's talk about rolling forward from prior quarter or prior year filing. Now, as soon as I file a 10Q or 10K with the SEC, I go ahead and get started rolling it forward to the next quarter. So if we look at this table over here on the slide, let's first talk about risk factors. Now, risk factors are not always required to be disclosed in 10Qs if there haven't been any material changes in the risk factors since the most recent 10K. A lot of companies still elect to include risk factors. We're going to assume that we are updating risk factors. So if we're rolling forward into the Q119 file, let's say, the easiest thing to do is to just copy the risk factors from the 10K after we've already rolled forward, right? Because once we've done this roll forward, we're now looking at an exact copy of the Q3 1810Q, and we want it to be the Q119 10Q. So the risk factors, what I'll do is I'll take the 10K risk factors, copy and just paste them right in to the Q119 risk factors, right over top of what was in there. Next, I like to do is I run a compare of the 2018 10K and the 2017 10K. And what this is going to do is it's going to show everything that's changed in the document from the last 365 days as of the date that we filed the 10K, the most recent 10K. Now, it's going to give us a lot of things that were already reflected in the Q3 18 file, but it's also going to give us all of the changes that happened in Q4, and specifically the changes that happened in the wording of MD&A and the wording of the F pages. The reason we can't just do a straight compare from the 10K to the 10Q is that they're very different documents. Things are not going to match up. You've got financial statements in the end of the 10Q, end of the 10K, and they're in the beginning of the 10Q, and then vice versa for the MD&A section. So I run this compare, and then I literally just throw the compare up on one monitor, and then I throw my live document up on the other, and I go down and I look at the F pages in the compare version and ensure that all wording changes that are made in the 10K are reflected in the 10Q. Now, a lot of these, again, are already going to have been made in either Q1, Q2, or Q3 of 18, but some of these changes actually will have resulted from reviews in Q4 of 18, and I mean reviews of the document. The next roll forward is going to be rolling forward into Q2 from Q1. This one is not nearly as difficult as this Q1 roll forward, but you do need to add in year-to-date amounts for anything that's an income statement amount, and then update any of the dates. The easiest roll forward to do is the Q2 to the Q3. Literally, you just need to update the dates. And if you're using an electronic system, almost all of the electronic filing systems now, Donnelly Active Disclosure, RDG, Workiva's Wdesk, they're all going to have a spot where you can update the date, and that's going to feed through to the rest of your financial statements. So you just update it once. And then another relatively difficult roll forward to do is when you're rolling forward the 10K. So the 10K, you want to copy and paste in the last year's 10K, but then for the risk factors, we want to take the Q3 risk factors, the most recent filing, and paste those in to now be our 10K risk factors. And then I do kind of a similar process that I did in Q1, but this time I do it with the Qs, and I compare Q3 18 to Q3 19, and I see what all has changed, and then I make sure all of those changes are reflected in my 10K document. After I get these roll forwards all done and update all my dates and all of my prior year or prior quarter numbers, then I go through and reread the entire document. Now, I know we've already read all of this, even the risk factors. We've read those last quarter. It's really important to read them again. Things have changed, and as you reread it, you think, oh, that changed, and so you update it. It's really important that you do this. And as we're talking about risk factors, I think this is kind of a good spot to go on a slight tangent, and let's talk about shareholder lawsuits. Now, we've all seen in the press about publicly traded companies being the defendant in class action shareholder lawsuits. Now, these shareholder lawsuits start with lawyers that see a significant drop in a publicly traded company's stock price. Then these lawyers and their firms start digging for dirt and looking for a reason that the stock price should have been predicted by the company and disclosed in the 10Qs or 10Ks before the stock price drop happened. Now, the very first place that these lawyers are going to start digging is in all of the SEC filings. It's very critical that these filings are accurate and that they're complete and they have all of the risks that you can possibly think of for the business. Now, the beauty of the position for the law firms in these class action lawsuits is that they have virtually no risk. If their lawsuit proves to be unfounded and later dismissed, it's kind of a no harm, no foul. In the US, there's almost no penalty for frivolous lawsuits. So in several other countries, loser pays the defendant's legal fees. In these countries, you don't see such a large volume of these shareholder lawsuits. Now, the other unfortunate thing is that a lot of companies, they'll just settle the lawsuit out of court, even if they believe that they're innocent, because it just ends up being cheaper to settle. Now, it becomes a decision to be made by the executive team. But a very important factor is that if a company gets a reputation, or the executives at the company get a reputation for just settling lawsuits, then they become a more likely target for future lawsuits. Now, shareholder lawsuits are very difficult to deal with for companies, and having solid disclosures in the 10Qs and 10Ks is oftentimes the number one defense against the shareholder lawsuit. So, with that said, now that the 10K and 10Q is rolled forward, it needs to be reviewed by another set of eyes. If it's rolled forward by the manager, let's say, then the director needs to read through the whole thing and recommend changes. If it's rolled forward by the director, then the controller needs to read through it, so on. If the company can have a rolled forward document that has been subjected to at least one level of review before the end of the period, you're going to be in great shape for your SEC reporting cycle. So let's do our final review question. Which of the following roll forwards is typically the least time consuming? So I'll let you read through them. So which one's the easiest? All right, everyone have their answer? All right, let's take a look. So answer is C. So when we're rolling forward from Q4 to Q1, we have to worry about all these changes that happened in the 10K, and then we have to figure out how to get those incorporated into the 10Q, because the 10Q has a much different structure than the 10K. Has a lot of the same components, but a different structure. Q1 to Q2 is not that difficult because we can just copy and paste Q1 to Q2 and then update the dates. So it's not as difficult. This one is by far the easiest, the Q2 to Q3, because all we do is copy and paste. And if you're using something like Workiva or Donnelly, their active disclosure, then you really just update the date once and it will flow through to the rest of the document. And again, this Q3 to Q4, this is not that easy of a roll forward because we're going from a 10Q to a 10K, and that becomes a little bit more challenging. All right, so thanks for sticking in there with me. So in this course, we talked about timeline, we talked about the tie-out binder, and we talked about rolling forward the 10Qs and the 10Ks. With the timeline, even if you're a smaller company, I still strongly urge you to do this timeline, do it in a detailed fashion, get people to sign off on it and to agree to it. It may start to feel like somewhat of an overkill while you're doing it, and other people might think that it's an overkill too, but it's not. I guarantee you it is really, really going to help you when you actually get to doing the reporting. With the tie-out binder, chances are if you're a publicly traded company right now, or if you're a large private company, you're already doing this tie-out binder. This is not new news to you. One thing though that I really urge you to check out is some of the paperless solutions that are out there for the tie-out binders. Now I know Workiva has a really cool paperless solution, and I think some of the other providers do as well. It's really neat. What you do is you attach tie-out support for every number that you have in there, just like you would a regular tie-out binder, right? And then whoever's reviewing the document, they'll go in and review the tie-out support, and they'll just do a light little sign-off on each one of those, an electronic sign-off. And then you as the preparer, let's say you go in and change that tie-out support after the reviewer has signed off on it, they'll get a quick little message that says, hey, that tie-out support changed. Do you want to re-review that tie-out support? And then also, if you're a larger company and you've got a lot of hands in that tie-out binder, for example, you might have 3 or 4 internal people working on putting together tie-out support. You might also have the internal auditors looking at it, the external auditors, the controller, the CFO. Sometimes it's hard to even figure out who has the binder. When you have a paperless solution, everyone can see everything, assuming that it's been shared at any given time. So you're never looking for the physical binder. You're never waiting to put things in the binder until someone gives it back to you. It's really, really nice. And there are a lot of checks and controls in there to ensure that things get signed off appropriately, and that when things change, people see the changes. And then the final thing that we talked about is doing the roll forward of the Q and the K. It's something that you're already doing, but I would really urge you to go out to the course documents, pull down this PowerPoint presentation, look at that one slide where I have a table of when you're rolling forward from a Q to a Q or from a Q to a K. Look at your applicable situation and see if you're doing those things. The big one is that compare. When you're doing a compare, when you're doing the Q1 10Q, You want to do that compare of the 10K so that you're getting all those changes to the F pages and the results of operations and liquidity and cash flows. So you're picking up all those changes that happened in Q4. I can't tell you how frustrating it is for a reviewer for them to say, didn't we change this last quarter? And it's going to be falling on deaf ears if you say, yeah, but that was a K, this is a Q. A lot of it's the same wording, and you need to make sure that you get it updated in both places. And one other thing that I want to touch on is I strongly urge you to be an author. So I will publish the work for you on the website. Send me a couple topic ideas, and we'll talk about it to make sure it's actually applicable to the website. I'll help you with edits. I'll help you make sure that everything is accurate. But become an author. It's very cool. You get to put it on your resume, and the best thing about it is you get free CPE for becoming an author. A lot of times it can be kind of a scary endeavor to think about being an author and sending articles into CPA journals, but it's way easier than that if you just get it published on the internet, and in most states it's still valid CPE as well. Also, I really would urge you to teach a course. I'll host the course for you on the internet. I'll get you all set up with the technology of how to do the course and how to make the review questions, all the requirements. Another awesome resume builder, and again, free CPE for doing these things. It's really a no-brainer. If you want to get more information about either being an author or teaching a course, go out to my website. I've got an article about both of those topics, and you can see some of the nuances about it. I've got some quotes from the California CPE regulations and the national NASBA CPE regulations on what exactly is required to earn that. Speaking of continuing education, to claim continuing education for this course that you just finished, you need to go to the website and take a quiz. Once you successfully pass that quiz with 70% or better, I'll email you a certificate of completion, and you can keep that for your records. So with that, that's it. Thanks a lot for joining me, and I hope you check out some of the other courses.